Hello everyone and welcome to your Glassnode video update for week 22, 2022. So what we're looking at this week is the concept of HODLers and where they fit into the current mix. We've obviously seen a large repricing that came the other week due to the whole lunar event and all of that extra sell side pressure and just the general uncertainty in the market. And what we've now got is a couple of weeks where we've been able to digest, the market's worked out what's going on, and we're starting to get a little bit more directionality. So we're seeing how people are responding and behaving following what was a very, very significant event. So it's almost the dust is settling and we're going to reassess what's going on with a particular focus on the HODLers. So as I mentioned, we had a very significant sell-off during the whole lunar fiasco, and really that tends to shake people's confidence. And we do see these events happen during bear markets because over time liquidity dries up and we are in a regime of broader monetary tightening on a macro scale. So these things will start to unwind, and then we have to have a process of people reassessing risk tolerance, their investments, and overall the market readjusts in terms of where it's allocating funds. So what we're going to look at today is the first thing we're going to start with is this very soft on-chain activity. This is continuous. This is a theme we've had for a number of weeks, in fact, for a number of months now, where we just haven't had the follow-through of on-chain activity. And in fact, this has been in effect since September. So we'll talk about that and what it means in terms of how we can assess who's in the market, who remains. We're going to look at the Accumulation Trend Score and spend a bit of time with it because we've seen a series of perfect scores. It's basically hitting values of 1 for about a week and a half. We've also had values above 0.9 for over 2 weeks. So just talking about what that actually means, and we'll dissect that into the different wallet cohorts to really understand a fuller picture of who is participating. And then we're going to close out with the long-term holder cohort. We know that these are the folks who have held their coins for more than 5 months. They are generally the least likely to spend in the face of volatility. And what we actually want to see is more of them coming into the system and not less. So we're going to assess the kind of changing balance that they have, what it means for the longer-term view. So as always, please do give us a share and a subscribe. It does help get this channel to more eyes. Hopefully you enjoy this particular session where we're going to really dissect and understand the accumulation score in particular. I know this is a metric that lots of people pay attention to, and really I want to show you some of the inner workings of it as displayed through multiple other metrics. So let's get started. So here we are in our week 22 dashboard. We're looking at the hardened hodlers who are doubling down in this particular instance. That's kind of the theme, and let's explore what that means. Now, as we know, we've seen about 8 weeks of these red candles, and this is the longest stretch in history. I think the previous one was 6 weekly red candles back in 2015. So it's been a very significant and long-winded drawdown, and we finally had a very small relief bounce. Now, remember that these relief bounces, even in bear markets, they can happen. We still get uptrends, miniature uptrends during downtrends and vice versa. There's miniature downtrends during uptrends. So this is one of these things we have to now assess. Do the fundamentals support this move? Do we actually have support underneath? Or is this more of a bear market relief rally? Much the same as we were looking at this consolidation. Is it a consolidation in a bottom form, or is it a bear flag? And ultimately, it turned out to be a bear flag. Now, what we're going to look at here is the on-chain activity. So we've got our number of active addresses with a non-zero balance. Now, this is a fairly big picture metric. It's also not overly precise, but what it gives us is a big picture view is the network growing? You can see through 2020 and 2021, we had significant wallet growth. Overall, more and more non-zero wallets, people are coming into the network. They can obviously be dollar cost averages. They can be people who are buying on a regular. It doesn't account for whether there's a 10,000 coins or a million coins or 1 coin or 0.1 coin. It doesn't matter how much is in them. We're just looking for, is there more usage and people coming in and sticking around? Now, what we can see is that during the May sell-off in 2021, we had this plateau. It actually sold off. We saw a bunch of wallets empty themselves out, completely sell everything, and then we plateaued all the way through to September. Now, from September, we've actually had a renewed wallet growth. It's not quite the same gradient. Remember, the steeper that this curve is going to be, the faster that the network is getting new users. So it's not quite as steep. But you can see that during this sell-off, we had a miniature purging. Let's actually zoom in just a little bit. We had a little bit of a purge of wallets, so some people certainly panicked, and we've gone back into an uptrend, but it's a little bit softer. So what we can see is that we still remain in this kind of, there's growth, but it's not the most exciting. It's not really accelerating, and it's not really blowing our socks off. Now, we can actually confirm this if we look at our number of active entities and our number of active addresses. So these are very similar. Obviously, the one where the entities is using a bit more clean data, it's filtering out all the internal transactions, but you can see that the overall patterns are very similar. So we can use them as equivalents. And you can see here the 7-day exponential moving average just smooths out some of that noise. You may all know that the active addresses and active entities, quite noisy charts on a daily basis. This just cleans them out using that moving average. Now, what do I actually want to do? Let's zoom in as we tend to do from 2016 onwards. This is kind of our modern history where the characteristics of Bitcoin is a bit more, call it cyclical. It moves with the bull and the bear. And what we can see is that we continue to trade in this sideways pattern on both of these metrics. We're essentially range bound. What we're seeing is that we've kind of got only the same people over and over again. This is the HODLer class we keep talking about. So we did see a very, very brief uptick on both of these metrics. As we expect, all these wallets get purged and we see an uptick in overall activity. And often what we see, if we look here in the 2018 bottom, that uptick actually signaled that there was further momentum. It stuck the landing, so to speak. We had the same after March 2020. We had the sell-off, we saw a big uptick in activity, and then that actually triggered the next bull run. Now, what we haven't seen with either of these two metrics is that follow through. We saw the uptick as people kind of panicked. They sent coins to exchanges. They recollateralized their positions. But what we didn't see is that follow through of, okay, now it's actually triggering the next momentum higher. So it does show that we've kind of got the hodlers left. We had a burst of activity and it's essentially flushed back down. So overall, the takeaway message from this is that the on-chain activity is telling us that we don't really have an influx of new users. It's essentially the same cohort of people that were there before the sell-off as after the sell-off. So little change in that regard. So now we're going to move and look at the accumulation trends. Now, the metric that we're basing this off is the Accumulation Trend Score. And if you haven't seen our Academy article on this, I would strongly recommend checking it out. It is in the description below, and it really gives a very detailed picture as to what this metric means and how to interpret it. So what we're looking at here is a metric that trades between 0 and 1. When it's 0, it's going to give you these yellow colors. And actually, let's zoom out for 2 years. You can really see this. See, during the 2021 period through most of it, it was fairly yellow and orange. This is basically showing that the overall balance change of the network was actually distributive. We weren't seeing overall, we're seeing this kind of accumulation going on. So when we have net accumulation, meaning the amount that wallets are increasing in value, so people are actually putting additional coins into their wallets, is offset by the sell side that's going on. Some people are selling, other people are buying, and this excludes exchanges. So you can almost imagine sellers putting coins into the exchanges, buyers pulling them out. How much overall are those two balances changing? Are exchange balances essentially absorbing that extra coin supply, or are investors essentially adding to their balance on net? Now you can see that we generally have these colors closer to 1, these purple colors, during 2 different events. In fact, we can even look at this on a much larger time scale. Let's look at it from 2017 onwards. There's 2 types of areas where we see these purple colors. During an uptrend or a bull market, we see them when people literally buy the top. This is, I mean, for all of the sell side, as the smart money is selling into strength, there's a whole lot more people coming in and adding to their balance. So that's why we get these big pushes at the top. You can see that bull markets typically have these large purple colors because people are essentially coming in and there's more buyers than sellers, hence the bull market, sorry. Now, there's another phase where we have these purple colors, such as the end of the 2018 bear, such as following the March 2020 sell-off. We had another one up here in December, which we'll touch on in a second, and our current environment. Now, these are all in downtrends. Now, with the exception of December up here, you can see that all of these typically happen following a major flush out. This was a 50% sell-off. March 2020 was 50% in a handful of days. So very, very significant capitulation style events. And now let's zoom into our current market. We can see that we had intermittent accumulation through here. This was kind of off and on. It was hot, it was cold. It wasn't really high conviction. Let's call it low conviction accumulation. Now that really softened into the lunar sell-off. We had the sell-off, and now here we are returning 0.9, 0.91, 1, 1, 1. Like, we're getting very high scores here. So we're going to dissect that and what's going on. Now, there was this one exception following the all-time high. These coins got accumulated, but it turns out that that dip wasn't the dip. And many of these actually got redistributed down here, which is why this was so off and on. For every buyer, there was actually a few more sellers coming in, and we gradually just couldn't hold it. We had a bit of a burst when Luna started to accumulate, and when that softened, everything just kind of collapsed. So what we're going to expect over the next couple of sessions, over the next couple of charts, is why we're getting this value of 1 for a persistent period of time. We can see that there has been a change of character. It's gone from soft accumulation to very, very strong for a sustained period. Let's dissect that in more detail. So what we have here are the entities or the balances held by entities with 0.1 to 1 BTC, 1 to 10 BTC, and 10 to 100. So let's just classify all of these as being under 100 BTC. That's the kind of wallet cohort that we're looking at here. And what you can see, note how all of these metrics actually screamed higher. We saw this expansion or the acceleration of balance being added to these wallets specifically following the sell-off. Let's put this one on 1 year. So we can see we had this expansion of these wallets adding to their balance. So what this is telling us is that people who are accumulating essentially less than 100 BTC have added significantly. This big uptick is showing up in their wallet balances. So they are contributing to this accumulation score. And now if we look at our overall accumulation score by wallet cohort, we can actually see these bottom 3 rungs here are less than 100. So from 1 to 1 to 10 to 10 to 100, we can see that they've gone significantly blue. We've seen a large scale amount of accumulation step in with that wallet cohort. Now there's another one with over 10,000. They have also been contributing. This is kind of that very big whale cohort. And let's bear in mind that this includes the Luna Foundation Guard, who had more than 10,000 coins. This includes them distributing. So essentially the amount that other 10,000 wallets have added has offset Luna as well. Now, another thing I want to note, which is quite interesting, is if we add up all of these wallets, so everything less than 100, since the sell-off happened, which was about 80,000 BTC that was sold by Luna, there was other sell side, but that's just the Luna component. All of these wallets combined have actually increased by 80,000 BTC, actually 80,700. So what we can otherwise see here is that the Luna Foundation Guard in distress sold 80,000 BTC to try and defend the Luna peg. And what we saw is that wallets under 100 BTC, or entities who own those wallets in aggregate, came in and scooped up pretty much the exact same volume. So we've seen a wealth transfer from the Luna Foundation Guard to these other wallet cohorts, albeit with a bit of a price correction that came alongside it, but this is the process of markets. But what we've seen is a change of ownership. We've seen other people stepping in and actually taking those coins, albeit at a price discount, but we've seen that wealth transfer of BTC from the Luna Foundation Guard to others who've stepped in and bought it. So it kind of shows and it backs up this overall accumulation score returning very high values. We can see it in all of our wallet breakdowns, and we can see it when we break it down by wallet cohort. So there's consistency. You can see that this metric is talking to itself amidst all the other pieces of data. So what I now want to look at is some of the long-term holder or the age cohorts. What's going on in terms of the supply dynamics when we factor in who actually holds those coins. So what we can see is a fairly large clustering of volume. This is from 26,000 up to about 33,000. This zone was previously fairly devoid of coins. What we really didn't have is a huge amount of supply that was accumulated down here, because on the way up, if you can remember that far back in December and January, when the bull market started, we essentially moved up very, very quickly. Next thing you know, we're at 30,000. So there was very little supply that was traded below that 30,000 level, and we're starting to get that filling out. Now, in this week Onchain report, which again you'll find in the description below, we actually captured that a lot of the spending has gone on from 42,000 up to about 49,000. That's really where a lot of the sellers have come from, who've actually panic sold and exited the position. Now, the rest of the market is actually fairly stable. And you can see here, there's a lot of coins up here at 55 and 60,000. Why on earth would you be holding your coins up there? Well, that's because by and large, we've now seen a significant correction. I mean, we're down at 28,000, 26,000, and we've seen that these holders up here at 50,000 simply are unfazed. It's adding additional weight to the fact that we have more of these long-term holders who are price insensitive in the market. The fact that this profile is changing very, very limited to a limited extent is showing that more or less there are more price insensitive hodlers in the market at this time. And that's what bear markets do. It tends to shake out the speculators and the tourists and leaves only those who have very, very high conviction. And we're seeing this show up in the data. We can see here that we have a very strong downtrend in play with these warmer, hot colored coins. These are under 3 months in particular. If we think about 3 months ago, that's essentially in the middle of the previous consolidation range. So let's actually just zoom in on this recent history. If we look back 3 months, we're in the middle of this recent consolidation up here at this 38,000 type level. And because we have all of these coins in decline, that means that they must by default be moving up the stack. The coins are getting more senior. We're seeing coins over time are aging, which again supports that notion that we essentially have hodlers in the market. We've seen this in the on-chain activity. We can see it in the supply distribution, and we can see it in our hodl waves. We're seeing all of these signals that are saying really it's the hodlers that are left, and there's very few new marginal buyers and sellers, which again is the process of a bear market, and it's what things start to look like when everyone else is being shaken out. Now, the last thing that I want to touch on is the long-term holder cohort specifically, and there's a few insights that we can pull from this. So we have here the supply held by long-term holders. We have their spending profit multiple, or the SOPR, and we then have what I call the spent price. We'll explore these one at a time because there's interesting insights all along the way. So the first one we can see is that long-term holder supply really stagnated around the all-time high. There was a little bit of spending that went on. This is very normal, but they saw that the market wasn't strong enough to absorb it, and it's essentially been trading sideways. Now, all the time there are coins migrating into long-term holder supply. So what this sideways plateauing is telling us is that for every coin that migrated in, another long-term holder was selling and getting out. So it's kind of this equilibrium. We're not getting much of a change. Now, what we have seen is over the last couple of weeks, a bit of an uptick. Now, remember that the long-term holder supply is looking back 5 months. And 5 months ago, we're in late December. So we're actually trailing on the way down. So you almost think about when this supply is going up, it's because 5 months ago, a series of coins were accumulated. Now, the low was put in down here in late January, which is in about 1 month's time. The long-term holder threshold will be entering the consolidation range that we're in for 2.5 months in about a month's time. Now, we know, based on this chart here, that there's a huge amount of supply that was reaccumulated in that consolidation range between about 33,000 and let's say 42,000. There's a huge amount of supply. Now, this is all short-term, not all of it, but a lot of it is short-term holder supply. So in 1 month's time, that tail end of this thing, assuming that long-term holders don't panic and assuming there's not a huge redistribution, the tail end of this is actually going to end up in this consolidation range. So in about a month's time, and for the next 3 months, let's say 3 to 4 months, I expect this metric, assuming no major sell side from long-term holders, to actually start to climb quite significantly. Now remember, these are coins that are already hodled. There's not looking at new supply. But if you do start seeing posts and people talking about long-term holder supply rising, the reason that's happening is because the 155-day or 5 months ago, we were inside this consolidation range and a large amount of coins remain hodled from that point. So that's the way to interpret that particular increase. So it's a good sign, but it also doesn't show what's going on in the immediate term. Now, in the immediate term, here's our long-term holder spent profit ratio. Now, what we actually have going on is we've got a value return below 1. This actually means that on average, long-term holders are selling at a loss. And what you can see is this only happens during the worst parts of bears. We're here at the back end of the 2018 bear. March 2020 visited it very briefly. And we can actually see that we returned here back even in the 2012 bear market, the 2015 bear market. Note that it can stay below 1 for some time. This is when long-term holders are panic selling and realizing losses. So it is significant. We are down below 1. It doesn't happen very often. When it does, it's near the end of bear markets, but that end can in some cases take over a year to actually resolve. It's at the later stage of it, but again, bear markets can take time. And what we can actually resolve this to is the long-term holder spent price model. So the way to think about this, if they're realizing a 200% profit, well, what was their cost basis? If the current price is 10,000, for example, what is the cost base that they need to do to realize a 2x multiple? Well, it'll be 5,000 because they're realizing 5,000 plus the 10,000 gives them a profit multiple of 2. So what we have here in our long-term holder spent price model is we can map out what is the price, what is the cost basis on average where those long-term holder coins are coming from. So here we can see that during the bear market, that cost basis starts to rise. Why is that? Well, 5 months ago, these are long-term holders who were buying on the way up. They became long-term holders because they didn't sell after this sell-off. When they did start selling was as the market actually traded below their cost basis. You can see here the black is trading below the pink. They're selling and realizing a loss. Their average cost basis of their sales is somewhere around $6,700, even though the market's trading at $3,000 to $4,000. We saw in March 2020, we had another brief period where they were realizing losses on their spending. And here we are where the long-term holder spent price is now up at around 35,000. So on average, long-term holders who are selling right now are realizing about a 27% loss on average, if we look at this on a 7-day moving average basis. So it's interesting that what we're seeing is that we have this kind of two-pronged effect. Long-term holders are generally fairly steadfast. They're holding on. We have a large portion of them in the market, but the ones that are spending are essentially realizing losses on average. So we are seeing that kind of moving into the later stage of the bear when pretty much everybody's at a loss, and we're seeing a whole lot of pain coming out in the spending behavior. So it's getting towards that interesting phase of the market where we're starting to shake out all those who are going to be shaken out. We're not quite there yet, as we can see, but we're getting towards that back end of that process. So thanks for tuning in for that session, folks. Hopefully you found that useful. Exploring the accumulation score so you can see some of the ingredients that go into it and the confluence between it and other metrics. We also explore what's going on with the long-term holders. They appear to be stacking sats again, even though they're currently holding coins that are at a loss. So we are starting to see a bit of pain coming through in their spending behavior, but hopefully what we're starting to see is that conviction level is building. It looks like it's stronger than it was back up at our previous consolidation range. Again, bear markets can take a long time to resolve, so we do have to exercise caution and understand that the macro environment and monetary tightening is a very, very challenging market to understand. But what we're trying to do is dissect that in the data. We're looking for those changes in behavior, and the accumulation trend score in particular has shown a change in behavior over this last couple of weeks. So it's one that I'm certainly paying attention to. So thanks as always for tuning in. Look forward to seeing you in the next one. I'll see you then. Cheers.